Today I am going to be going over options trading strategies that I use regularly to make money in the stock market. Right. So I'm going to teach you guys, right? Something that I stand by. What I try to do is try to educate, trying to literally give as much game as possible. Because I know times right now are rough. We're going through a recession. There's a lot happening in the economy. So the best way that I know I can help others is by empowering, giving as much knowledge as possible, whether you use it on your own, whether you use it, in our server. I believe options trading is something that you can use for the rest of your life. I literally believe that it's a skill. Once you learn it, literally it'll do wonders for you. And then me helping you, me teaching you, it does not hurt me at all, because at the end of the day, I'm still going to trade in the stock market. So the least that I can do is just give you the game, right? And you have to apply it for yourself once I teach you all these different things. And then from there, you just, you take it and run with it. All right. So thanks for checking in. And then those that are on YouTube watching this, thank you for watching. Make sure you guys are subscribing. All right. And leave a comment or questions, and I'll try to get back to you as soon as possible. All right. So let's go. All right. So first things, right? One of the main things that I look at when it comes to finding like just option strategies or just trading, right? The number one thing, the most important thing for me is options volume, right? Options. I cannot stress how important that is, right? That's the number one thing for any of my strategies, right? To work, it requires options volume, right? So what is options volume, right? So all options volume is it's contracts being exchanged from one seller and buyer. It's not how many people are buying. However, it's the number of contracts that are being bought and sold, right? So that tells you the number of contracts, not how many people are buying. So when you see the volume, right, just know this is the amount of contracts that's being purchased, that's being sold, exchanged, right? The reason why it's so important is because volume, stocks that have high volume, they move the market. Contracts that have high volume are the best contracts. They give you the highest probability to win. They have the tightest spreads, right? So we're going to look at two different ways that I use volume. One, I use volume just to find the right stocks to trade. And then volume when trading, whether it could be the hourly, the 4 hour, the 1 minute, depending on what time frames that I use the volume, excuse me, right? So if you don't know how to find the right stocks to trade using the volume, the simplest way you can find it is simply by looking up mega cap stocks, right? By looking up the Dow Jones Industrial 30. They'll give you the 30 biggest blue chip stocks in the market. These are the top stocks in their industries, right? So these are the Teslas, the Apples, the Amazon stocks. I'm going to pull it up so you can see what they are. I'm going to share the screen as well. Blue chip stocks. And so I'm going to share my screen. All right. Can you guys see the screen? It's Finviz. Can you guys see it? Just want to do a quick check. Let me know if you can see it. Just write a yes in the chat for me. Just want to make sure you guys are seeing everything. All right, awesome. Right. So Finviz, if you guys don't use it, this is definitely a website that I would recommend you guys using. For the most part, a lot of this is free. There are certain things that are not free. I have the elite account. However, you can get a lot for the free as well. There's a lot of things on there that is free, right? So what you want to do, right? So I'm gonna just really quickly, I'm gonna show you. We're gonna take a look at the Dow Jones Industrial 30. Right. So what we want to do, we want to go to index, right? So it's going to show us, right? So these are the Apple, right? These are the big stocks, right? So it's 30 big stocks, right? So if you don't know what stocks to pick from, what stocks to trade, these stocks right here, they have relatively the highest volume, to trade, right? So these are the stocks that move the market, right? Another thing you can look at, right? So these are the big stocks. These are the stocks that move the market. So this was the S&P 500 today, right? So Microsoft, NVDA, Google, pretty much the big squares, right? They hold the biggest percentage of the S&P 500. The S&P 500 holds the 500 largest companies in the US stock market, right? So Apple is the biggest in the S&P 500, and you have Microsoft, Google. So these are the stocks like you'll see me trade regularly, right? The guys that are on our Discord, you'll see me NVDA, one of my favorite stocks to trade, AMD, Amazon, Tesla. These are the QQQs, and then the S&P 500, SPY, the whole thing, right? So you want to trade stocks that have high volume. High volume means you'll have a higher opportunity to win that trade because it's going to move better. The price action is going to be better because it's more volatile, right? And then the contracts are going to be better because they're going to be tighter spreads. And spreads are very important because you don't want to get into a trade when they have wide spreads. And I'm going to show you an example. All right, so let's pull it up. All right, so let's see the other one. So let's see. So, all right. So this is NVDA, right? I'm going to show you the spreads, right? Well, I'm going to show you just in general the volume of a blue chip stock versus volume of just a regular stock or just something like a meme stock. You're going to see the difference, right? All right. So let's start with Apple. All right. If you look at Apple, just look at the options chain. So this is the Thinkorswim platform, guys. So just in case if you don't know what I'm using, right? This is the Thinkorswim platform, right? You said, how much would you consider high volume? It all varies, and you'll be able to see that. I'll show you too. I'm going to show you, and you'll be able to kind of see, right? There's not a specific number, but you want to kind of look, you want to be able to have all the strikes. You want to be able to have access to a whole exploration. Because say if a stock doesn't have enough volume, it's not going to be optionable. You're not going to see all of the options chain. It's only going to have a few because there's not enough volume to go that far out. All right. So that's something. And then if I don't get to your questions now, I am going to get questions at the end, guys. So, if you have any questions, you can write them down, right? Just so I don't want to stray off too much or anything like that. So if you have any questions, you can write them down. Or you can, and I'll try to review and run it back and see if any questions that I miss. All right. We'll do a Q&A at the end. Right. So for example, this is Apple. If you notice Apple right here, look at the options chain, right? It has pretty much everything. And you can see the total volume at the bottom, 890,000. This is the total volume versus let's use BlackBerry, right? Not that anybody has BlackBerry anymore, but let's use BlackBerry. This was a meme stock at one point, right? Let's take a look at the total volume, 3,623, right? That's not a lot of volume. And if you notice the option chain, not everything is there. So let's go back to Apple. If you notice now, Apple, the whole option chain is there, right? And in volume difference, 890,437 versus BlackBerry. Or you're looking at 3,623 and it's missing some of the options chain, right? So now I'm going to show you, if you look at Apple, you're going to see the spread difference, right? So let's pull up the 17th, which is Friday's expiration. So options expirations every Friday, they expire. Options contract expire every Friday with the exception of the SPYs, the QQQs of the world, right? So if you notice with the options volume for Apple, March 17th, right? Some high volume here, right? High volume, right? Let's take a look at the difference with BlackBerry. BlackBerry, look at the difference. Barely any volume, right? Barely any volume, right? So this tells me this is not a favorable stock to trade. Why? Because there's not that much volume there, right? So you want to be very mindful and very careful of the stock that you're trading. The way that you kind of figure out if this is good enough volume, you can take a look, take a look at the options chain. All right, you can't see it? Okay, let me just pull it back. Sorry, guys. I thought it was the sharing. Let's try again. What about now? Can you guys see it? And I'll just run it back through. Can you see the option chain now? All right, awesome. So sorry about that. Let me just run it back for you guys. All right, so let's pull it back. All right, sorry about that. So I'm pull it back so you can see. All right, so this is Apple, right? This is Apple's option chain. What I was talking about was this at the bottom here, where it says total volume. You're looking at is 800, right? 890,437. That's the total volume of Apple, right? And if you notice the option chain, literally it fills all the way out to 2025, right? Versus BlackBerry, if you look at the option chain right here, it's 3,620, right? 3,623, sorry, 623. That's not a lot of volume. If you notice the option chain, there's a lot of expiration dates that's not there, right? So this right here tells me this is not a favorable stock to trade because there's not enough options contract that are going to be available. There's not enough expirations there. So therefore, if I try to go a little further out, I'm not going to be able to get some contracts, right? So let's take a look at the difference now when you look at the contract prices, right, in regards to the volume. So let's pull up Apple. Right, we're going to go to March 17th. As I was saying before, the 17th, that's in 2 days, that's Friday, right? So every Friday, options contract expire with the exception of the SPYs, QQQs, VIX, the volatility indexes, right? So with Apple right here, if you notice, a lot of volume over here, a lot, 77,000, 48,000, 21,000, 11,000, right? A lot of volume over here, right? So now if you go back to BlackBerry or even in the put side, right? 23,000, 10,000, right? There's a lot of volume over here, 18,000, 5,000, right? The market is closed right now. So say if we were trading in the morning, it would be a lot higher. Say if we were during market hours, it would be a lot higher, right? So this was when we closed, right? So we're going to pull up BlackBerry now. Let's take a look at the difference. If you notice, there's this is barely any volume, right? So if you notice, right, this is 24 cents. This is 24 cents. Anyone could, if you can, 274, this is $24. One person can literally buy this whole thing, right? It's not a lot, right? So it's not a lot at all. So that's $24, literally, right? So you can literally buy this whole thing by yourself. So the reason why that's important, because say if you buy that much contracts, right? So if you're like, you want to spend $2,000 or $3,000 and you buy all that contract, you're going to run into the problem where because there's low volume, there's not going to be anyone on the other side when you try to sell that contract. So the volume is important because you need to be able to sell those contracts. If there's no one for you to sell the contracts to, your contract is going to expire worthless. If there's no one for you to let your contract go, there's no one, you can't sell it. You have to hold on to it. You have to hold on to it. So unless the stock completely outperform, where when it comes time for the expiration, you end up money where it'll automatically exercise it for you, which is highly unlikely, you're going to end up expiring worthless and losing money because there's not enough contracts there. Something to keep in mind, there are some big cap stocks, right, that are not optionable. For example, you have Johnson & Johnson, right? I'm going to show you an example, right? There's not a lot of volumes with them, right? This is Johnson & Johnson. This is a big cap stock in the healthcare industry, literally one of the best stocks for dividends. But if you notice the spread difference, because it's just not enough volume there, right? It's a great stock for buying and hold, but it's not optionable. So that's something to consider as well. CRM is the same way as well, right? So this right here, 86 cents, that means if you were to enter that contract at $86, because one option contract goes 100 shares, automatically, as soon as you enter, you're down to $63. You're down to $63. You're going to be down 15, 20+% as automatically as soon as you enter that trade, right? So you don't want to trade a stock that's not with high volume, because now it's going to put you in a tougher position, because you want your spreads to be tight, about 1 to 5 cents close to each other, right? You want your spreads to be tight, because if your spreads are far apart, you're going to start off in a bad position. That's part of having a good setup. That's part of having good volume, right? Same thing with CRM. CRM, great stock, right? But if you notice, there's not a lot of volume. The spreads, they're very far apart. This is not a stock that trades regularly, right? This is not people literally. This is not a stock I would want to trade, or I would recommend somebody to trade, because you'll be starting this trade like completely down. So therefore, the stock would completely have to outperform. Right? So that right there is the importance of volume, because it will move the market, right? So the next thing that I use volume for, right? But actually, before that, for those that don't know what stock to trade, like I was saying before, you want to look at big cap stocks, right? Those big stocks, that's what you want to look at. If you don't know, if all else fell, you can literally just trade SPY and QQQ. SPY and QQQ have the most volumes for ETFs, right? If all else fails, you can trade SPY. Literally. And SPY, it expires, it does 1 day expirations, right? So that means the same day expirations as well, right? So that, as you can see, the option chain is a lot bigger, right? So SPY, QQQ, just like literally, if you don't know what stocks to trade, all right? And if you look at the volume, 10,786,450, the most volume, right? And this is a regular stock that I trade, right? Regular stock that I trade, right? I'm going to show you guys, right? Every morning, I'm going to show you the stocks that I literally, new share, right? So literally, anytime that I send out my watch list, you'll see the same, literally the same stocks you want to pick, right? These are the stocks that have high volume, right? So you want to pick about 5 stocks, pick a handful of stocks, about 5 stocks, right, that have high volume, right? And then you should be good. Something you will realize is those stocks, they tend to do the same price action regularly. They have certain patterns where you'll see them a lot. And then the more time you spend with those stocks, you'll understand their price action, because they move a certain way. All right. So like I was saying, Tesla, NVDA, AMD, QQQ, SPY, these are the stocks that I trade regularly. Tesla, NVDA, Amazon, right? These are the regulars. These are the regulars right there, right? Same thing. SPY. If you're making money in those stocks, there's no need for you to look for the next stock, because those stocks have high volume. Whatever stocks you decide to go with, right? Stick with those stocks. It will help you in the long run. All right. And then now the next thing where you want to use volume for, I'm going to share that other screen. All right. Can you guys see this chart now? Let me know if you can see Tesla and SPY. Give me a yes in the comment or in the chat. All right, awesome. All right. So at the bottom, depending on the time frames that you're looking at, anytime that I trade, right? Any positions that I'm looking at, I always look at the volume, right? Let me just make this a little bigger so you guys can see. All right. You can see the volumes, right? Literally at the bottom, you can see the volume, right? Because the volume, right? So the volume will represent selling and buying pressure, right? So let's take a look at some moves, right? As you can see right here, you see this momentum that's going up. You see this trend right here. As you can see, the volume is increasing. You have some rising volume, right? So you had a volume spike. You got a nice little jump, right? Look at this right here. You see this right here? Look at the volumes as it's increasing, right? Right there. So if the red ones, those are your red candles, selling pressure. The greens one, buying. As you can see, as you're going up, you see the rising volume, literally, right? So before going in any trade, I like to look at the volumes as well. I want to see, hey, do we have enough volume? If there's not enough volume, right, that means that trend is more likely going to come down. So you want to make sure, right, that there's volume there. And this is what I mean every time you guys will know, right? I'm like, hey, there's not enough volume. So I'll check the overall volume in the market and I'll look at the candles. And then each candle, depending on whatever time frame that you're looking at, say if it's the 5 minute, each candle will represent that volume. So if it could be a 5 minute candle, this will represent the volume, right? So as you can see, there's a high selling pressure over here. Take a look at the volume. There was over 4 million right here, right? You can see everything right here. It's all there for you, right? All there, right? So right here, the uptrend, we started going up. Volume picked up right here. We had a big volume spike, right? So this is very important because if you're getting in a trade, if the volume is relatively low, right, you're going to be screwed, right? You're going to be screwed. So you want to have good volume, and you'll be able to see the volume as you're in these trades. And also you'll notice when you have choppy price actions, right, the volumes are pretty much very close to each other. They'll literally stick within a certain trend, right? So that's something to take in consideration, right? Volume, right? So let's go into the next one now. All right. So the next thing that I like to look at, right? Right. This is all back to part of my strategies. First one was the volume, right? Trading based, finding the right stocks to trade based on high volume, and then trading utilizing the volume candles, right? So now support and resistance. Can you guys see the support and resistance? Let me know if you can see the PowerPoint for it says support and resistance. Just all right, awesome. Okay, all right. So I like to look at support and resistance, right? So you can play support and resistance, right? And I'm going to show you different ways you can play support and you can play the resistance. But what is support, right? Like what is support and what is resistance, right? And then how can you tell if something is support or resistance, right? So support, think of it like say if you have a building, right? And in the building, when you walk in, you're on the first floor. And in the first floor, right? You're on the first floor. The ground, that's your support. The ground that you're walking on, that's your support, right? Say if you're walking, the ground, that's your support. The ceiling, that's your resistance. Support, resistance, right? So as you go into the next floor, say if you're walking up the steps to get to the next floor, right? However, you can't pass the ceiling or it's closed off, that's your resistance. You can't get over that. That's the resistance. So in order to get to the next level, you have to get over that ceiling, right? Support, right? So what will happen at times where you'll get a rejection under resistance and you'll come back down to support, right? So you want to look to play support or you want to look to play the resistance, right? Whether it's rejection or if it breaks the resistance. So these are things that I look for when I'm trading support and resistance. I'm going to show you some examples of that and how you can find support and resistance. All right, so I'm going to pull up just one screen just to make it a lot easier. Right, and then those will be key levels. Support and resistance, those will be key levels, right? These are key levels in the price action. Let me clear this out. All right, so I'm just going to remove all studies, just use a naked chart just to make it as easy as possible. All right, let's go 1 hour candles. All right, so support and resistance, we're going to draw it. All right, let's use less of the chop. All right, so right here, right? So let's start right over here, right? So I'm going to draw a line, right? This is going to be my floor. I'm going to draw a line. This is going to be my floor. All right, draw a line across. Right, this is my floor, right? So now I want to look for a resistance, right? So we're going to go up right here. There's a lot of things here. So what you always want to look for, you want to look for the least path of resistance, right? So we're going to keep it very simple so you don't get too complicated, so it doesn't get too complicated, right? So we're going to use this as a resistance right here, right? Right here, this is a resistance. All right, so this is the first part of this is your first floor. All right, so now we're going to go on the second floor. All right, and then we'll go up. And then something that you will notice, right? The different levels, they're never going to be equal. They're never going to be the same, right? So if there could be a resistance literally a couple of cents away, there can be a resistance very far away, depending if there's a big gap, right? So you can be drawing support and resistance line for a long time. So that's why you have to find the least path of resistance. That means it'll be a lot easier. If there's gaps to fill, it's a lot easier, right? Because if there's less things in the way, that stock will have a higher probability of getting to that next level, right? So say if this right here is our next floor, and then right here, next floor, right? So this is the floor. So as you're going up from right here, this is a resistance, right? So starting here, right around here, this is a resistance. And then when you get to the next level, this is a resistance. When you get to, and then just keeps going. So once you cross that resistance, it now becomes support. Once you cross that resistance, it now becomes support, right? So I like to play, right? I like to play gaps, right? I like to play big, as you can see right here, this would be a perfect one right here, right? So right here, make it even easier for you guys. If you notice right here, this is a major support, right? And then the next support, right? Let's go right here. And then over here, right? And that would be going back if you were going back. This candle right here, right? These candles, right? I zoomed in, but if I were to go back, it would literally, the further back I go, this right here would have been the resistance. But if you notice, there was a big gap to fill here, right? This right here, these green candles, right? There's the least path of resistance. The least path of resistance. So you'll get the biggest moves, right? You'll get the biggest moves. So something that I like to use, right? I like to use the support and resistance to find gaps. Because if you can find gaps to fill, therefore you have a higher probability of winning that trade, right? So a break of support or a break of resistance. So therefore, say right here, it breaks support. That means you'll go down to the next level. Or say if it breaks resistance, it'll go up to the next level. You have a gap fill, right? So you want to look for that. Where when a stock is too choppy, when you see too much resistance, what you want to do, you just want to avoid that altogether and try to look for where there's less resistance. Remember, the least path of resistance. Therefore, you have a higher probability of winning that trade. Not to say that you can't win it. It's just you want higher probability setups. All right. So that's your support and resistance. Let's go into the next one. Oh, sorry. And then before I forget, so for supports, say if you break support, you would look to play puts. And say if you break resistance, you would look to play calls, right? So you break support, you can look to play puts. You break resistance, you look to play calls. Calls is when you think the stock is going to go up. Puts is when you think the stock is going to go down, right? So therefore, you want to use that. That's how I would use it for calls or puts, right? So keep that in mind. Calls when you break resistance, and then puts when you break support. All right, the next thing is trend lines, right? The trend line will show the direction of the stock, right? You can play trend lines. This is a setup that I use every time, right? No, not every time, all the time. One, you'll be able to identify the trend that you're in, whether it's bullish or bearish. The number one thing before you get into anything, right? In order to decide if it's a call or put, you have to identify the trend. And the way that you identify the trend is you draw a trend line. And the trend line can act as support and resistance. You can have an uptrend, you can have a downtrend. And an uptrend, you can play calls, and a downtrend, you would play puts. All right. And let me show you some examples. All right, let's go to VDA. All right, so all right, I'm going to draw a trend line right here, if you know. All right. This is an uptrend. Right here. Just drawing a basic trend line. Let me make this bigger for you guys so you can see. Can you guys see the screen? Just want to check so you guys are not missing out. Just type in a quick yes for me. Make this bigger. All right, awesome. Okay. So trend line, right? So if you notice, this is an uptrend, right? So this tells me, this is how I would identify if this stock is bullish or bearish, depending on which time frame that I'm looking at. This will determine whether I do calls or puts, right? First thing you want to do, identify the trend, right? So just say if I were to just draw a basic trend line, right? If you notice here, right, the stock is bouncing off this trend line. The stock is bouncing off this trend line. So you can use the uptrend. You can use the uptrend to your advantage. So if you're thinking about getting to some calls and you start to see a little bit touch, like right here, that was the first one, right? Touch here again, second time. Touch here again the third time, right? And then it got close to it, but it didn't hit it. And then it broke the trend line right over here. And even still, it acted as a resistance over here before you broke it, right? And then came right back down. And ultimately, it would have rejected it over here. This is a trend line, right? This is a trend line. And now that you see that it broke the trend line, it just started moving sideways. So say if I wanted to get in some calls, I would get into the trend, right? And when it breaks the trend, right, I would look to see when it breaks the trend. When it breaks the trend, that's when you look to get out, or you get out before you take profits in advance, right? So that's an uptrend, right? You also have downtrends. Let's take a look. Right here. This is a downtrend. So before the stock went up, right, it had went up over here on this trend. Right, look at this trend right here. You will see. I'm going to show you, and this is the 4-hour time frame. So say if you wanted to swing some calls, some long calls, you can literally just play the trend line, right? Right there. See the bounce, right? So yesterday I played AMD. Let's pull up AMD, right? Let's go on a 1 minute. Let's take a look. Hopefully I can go back. So 5 minutes. It's not going to let me go that far. All right. Oh, there it is. So yesterday I had gotten into some AMD calls, right? And then we had made profits on it. This was in the second one that we got in, right? And then all I used was the trend line. That's all I was using yesterday. It was the trend line. I saw that we had this uptrend, but it was like a choppy trend, right? So literally it was staying within this trend line. It was staying within this trend line. And then it finally ended up breaking the trend line and moved sideways. All right, let me see if I can find it and pull it up. I'm going to share. Just kind of show you. Right, so let's see here. All right, so let's go to yesterday. So AMD, yep, this was when I got in AMD. I got in because I saw there was a trend line forming. This was this trend line, right? Originally, it started forming the trend line, but the first one right? It started right here, right? Actually, it was 9:30. This is when the market opened. Pull it up. Let me pull it up. Hold on. Let me reshare. Hold on, I'm going to show it 1 second. There it is. All right, so you guys should be able to see it now. So this is the trend line right here. All right, so this was yesterday. I got into AMD. This was the trend line that I was following. So it was going in its uptrend, right? So this is the uptrend that it was going in, right? This was when I made profit. So right here, we had a huge volume spike. We had a huge volume spike. This was literally at 9:30 when the market opened, right? Sometimes you can't, like, unless you're like, you literally have the trade set up, like you're, for it to fill at the open, there's no way you're going to be able to catch it in time because it just shoots up literally at the open at 9:30. But after it came back down, it started going up in this uptrend, right? It started going in this uptrend, right? So you can literally use the trend line. And I had gotten some calls. And then after, if you notice, right, it got choppy. So you got to literally find the trend. There was another trend right here that started forming. It can be, let's look at the downtrend. So right here, this is a downtrend, right? If you go down, it's down. So literally, if you can find certain trends, you'll be able to see that the stock is moving a certain way. This is a trend right here, right? Trend right here, right? So you can literally find trends. And what will happen, you'll just see the stock move along that trend line for calls or for puts. For calls or for puts, you can find trend, right? And this we made, I think it was 15% I made yesterday on it. It was 15%. And all I did was look at the trend line and just follow the trend, right? And then the only thing, right, when it comes to the trend line, right, if it breaks the trend line, right, sometimes it may break hard, right, depending if you have a choppy price action, right, and it'll come back to retest, right, so you'll get a drop, right, well below the trend line, but it's like so quick. Let's take a look, like right here, as you can see, because the price action is it's just so strong right now, right, with all this news and everything that's happening. So therefore, you might get a huge candle drop right here. Take a look right here, right? You get a huge candle drop, right? Big selling pressure, and then the bulls took back control and just right back, right? So you look, in some ways, you gotta have like what's that saying? Like diamond hands, right? To stay in some of these trades at a time, because the price action right now, this is not normal price action in a good market, right? I don't know if you guys were, if you were trading before when the price action was okay, before all this chaos, right? You wouldn't see as much chop, or these candlesticks wouldn't look like this, right? There'll be more consistency. But right now, because it's all over the place, right? But oh, sorry, this popped up. Yeah, because it's all over the place, right? So therefore, you won't be able to, get clear price action. But if you can follow a nice trend line and have your trend line set, you'll be able to make some money, right? You'll be able to make some money. Let's go to the next one. Share the screen. And don't forget, uptrends, you play calls. Downtrends, you play puts. Uptrends, you play calls. Downtrends, you play puts. And then calls if you think the stock is going to go up, puts if you think the stock is going to go down, right? So the next thing, bounce and rejects, right? Other strategy that I use, bounce and rejects, right? This is one of my favorite strategies to use, right? And I'm going to show you, well, what a bounce is to begin with, right? So bounce is when the stock, you'll see it hit a support. And then a reject is when you see the stock hit the resistance and it'll come back down. So bounce will hit the support and it'll come back up. Price of the stock will change. So if it's going down, it bounces off that support level that I was showing you at, right? And it'll go up. Something else that can be used as support and resistance, but are not mainly support and resistance, are trend lines. So like the other day, I caught a bounce on Tesla using the 200-day moving average. I'm going to show you some examples of some bounce and rejects. All right, I'm going to share the screen. right? So can you guys see? Let's see. Can you guys see the Discord server? I'm gonna show you an example of a bounce we caught. Let me know if you can see it. Give me a yes if you can. Type in yes if you can see the screen, the 200-day moving average I'm showing right here. All right, awesome. Okay, cool. Right. So I believe this might have been, when was this? This was the 310. So last week, right? So right here, this was a bounce that I caught, right? So this bounce, this was the 200-day moving average, right? 200-day moving average. And then also, this was a support right here. So if you notice, the support was this candle. The support was this candle, right? This was the support going across. And right here, the 200-day moving average, right? Bounce and reject. This was a reject over here. It rejected it. So it acted out as a resistance, right? So this candle was going up, as you can see here. This candle, right, was going up, and it ran into the 200-day moving average, rejected it, right? And then went back up. And now ultimately what rejected it became the new support. So right here became support. Just like I was showing you support and resistance. The moving averages can be your resistance. And the moving averages that I use for are the 50-day moving average, the 100-day moving average, and the 200-day moving average, right? 50-day, 100-day, and 200-day moving average, right? So the 200-day moving average right here was support, was resistance, ended up being support. And it ended up being support over here as well. And this was the 50-day moving average. So both of these ended up being support. Both of these ended up being support, right? And this was right here. So if you notice, you guys notice right now, I'm looking for a possible bounce here on the 200-day SMA and Tesla, right? And the way that I figured that out, I knew that was going to happen was because I saw before 2 times that had bounced, and then I saw it was also a rejection point, right? I saw it was a rejection point. I saw it was a bounce right here. So that told me, right, confirmation that we're more likely we have a high probability of getting a bounce, right, if we come to these levels again. And that would happen. That was what happened, right? And then I sent out the signal. It was Tesla, the 310, right here. Tesla 310, all right? March 10th, $177.5 call at 0.77 cents, right? And for those that are new, that still learning about options trading, so all this means is Tesla, this is the stock that we're trading. March 10th, this is the expiration date. This is the strike price. And then calls or put. The strike price, that's also known as your exercise price, right? And then the expiration date on or before that day, you'll have 3 options. The first option is you can close and take profit for win or loss, right? The second option, if you are in the money, you can exercise your contract and turn it into shares. The third option, you can let it run to zero, let it expire worthless, right? 3 options you got to determine, right? And this right here is your contract price, 77 cents. All you would do is you multiply it by 100. When you multiply it by 100, it'll give you a true price that you're paying for that contract. So 77 cents means you would be paying $77. And the reason why you're multiplying it by 100 because one option contract equals 100 shares. All right. So sent out the signal. Let's go to 310. 310 right here. Notice AMD. This was all right. So I made 35% on this bounce. This was Tesla. I made 35. Was it? I think this was. Yeah, this was it right here. Yeah, 35% on this bounce. 35% right here. Right here, 10 March 23, 177.5 call. Right, 35% because I played the bounce. Right. And then for those that are on YouTube or those that are first time tuning in, this is the premium server, right? And the way that you'd get access to it, right? I'll leave the link in the description below for those that are on YouTube to get access to the server. And then real quickly, I want to show you guys what you get to learn options trading. Once you click that link, come to the educational videos. I'm also going to put this video on here as well for replay for those, and I'll drop it in YouTube. All right. So just watch the videos. It'll help you get started learning options trading. Just watch a lot of the videos. There's still videos, more videos that I have that I'm going to be dropping. Right. And then we have the weekly webinar, which is the webinar. This is what I'm doing right now. Right. And I do that weekly. And then I give you the watch list all right here with calls, puts, the stock that I'm looking to trade each day before the market opens, with the prices for entry and exit. I do it all for you. I do literally the work. So this takes about an hour or two to do every morning. So I'm up at 7 a.m. Eastern Standard Time, prepping for the market, looking at the price action, looking for the best possible setups, right? And the way that I find these setups is by using these strategies that I'm showing you guys right now. And that's how I come up with my entries, my exits. So I know my plan in advance before going into it. That's how I'm able to figure out, all right, this is what I'm going to do, right? So yes, these trades probably take about 5-10 minutes max, depending if there's no choppiness, if we're not stuck in it. But this is how it comes all about, right? And then pretty much I'm teaching you how to fish. I'm teaching you everything like I'm doing right now, right? So literally you can trade on your own for yourself all here using this free tool, right? And if you need more help, all you would do, you schedule a one-on-one coaching session, and that one is not for free. Pretty much teaching you everything that you need to know, and that's $110. Anything that you want to know about the stock market, go further in depth if that you're not learning from all the free tools that I'm providing for you. And then to get the signals and alerts, that's also not in there, right? Why? Because I'm already teaching you everything, so you should be able to do everything for yourself. But if you want the help, if you want me to just kind of hold your hands, kind of walk you through everything, make it as easy and as simple as for you, then you would upgrade, right? You just click on the upgrade, and they'll take you to this page, and you can do a 7-day free trial. You'll see for yourself, and I'll show it real quickly for you guys so you can see what you'd be getting, right? And then the monthly subscription is $39.95, very affordable, very doable. And the reason why I have it that price, so therefore everyone will have an option to be able to get into it, especially given the current economy. I didn't want to make it expensive. I wanted to make it affordable for everyone. And that's also why I send out affordable contract to help people who have small accounts. So therefore you guys can make money, or you can do a yearly as well, which you'll be looking at saving $130 on the yearly, right? And then I'm going to show you what you get. Well, before we even get there, right? Because I know there's probably going to be people that ask, hey, is this guy legit? Or is this, like, is this a scam? What's going on? So what you can do, you can scroll through the testimonials. This will go back since 2020. So before 2022, since 2020, I was sending out free alerts. It was all there, right? So since 2020, right, I was sending out free alerts, just kind of help everyone in the stock market for free. And then as of last year, I turned this into the paid subscription. All right. And then what you would get is, once you get into the server, all right, you have all your beginner stuff teaching you everything there already. And then you have the watch list every morning that I'm sending that out, right? Every morning I'm sending out a watch list. But not only that, but I also give you the breakdown of the charts, what I'm looking at before I get into these trades. I'll let you know the reasons why I'm going to be getting into these trades, teaching you as I go, right? And when it comes time to get into these trades, I'll let you know the contract prices in advance. So therefore you can get ready to get in these trades with me, right? And then when I send out the signal, I come in here. Every signal that I send, I make sure that it's affordable for everyone to get into. I make sure that it's less than $130. So all you need to get into, like, for example, this trade was $77, $93. I try to make it as small account friendly as possible. And if you want to spend more, all you would do is buy more contracts, right? And then after I send out the signal, I come in here. I keep you updated with what's happening in the trade, whether we're winning, whether we're losing. I keep you updated, right? So I keep you posted in everything that's happening. All right, so we can scroll, I'll do a quick scroll for you guys, show you the wins, losses, so therefore you know exactly what you're getting, right, real quickly. All right, so this was a loss right here, win, loss. Let's see, win. So we can go back. So I think the last 20 trades, I think I have 3 losses out of the last 20 trades, and this there you can kind of scroll, you'll be able to see it. because I don't want to take forever. I want to continue to get back to educating you guys, right? And you can literally, you can scroll going back, all right? But I don't hide my losses, right? Because it comes with the game. So it's all there for you, all right? So now let's get back to it. Oh, and also don't my long-term investors as well, right? I'll let you know when you should be buying, what your portfolio should look like. It's all there for you as well. All right, so let's get back. I'm going to share my screen again. Can you guys see the reversals? Type in yes if you can see it. You guys see the reversals? Okay, perfect. Right. So the next setup that I like to look for, right? These are all high probability setups, by the way, guys. If you any of these strategies, these are high probability strategies. These are strategies that I use daily. These are strategies that I use daily, right? So next setup is reversals, right? So I like to use the reversals using the RSI, right? So all the reversals is just you're looking for a change in the price. And the way that I like to look for the change in the price, I like to use the RSI. So I'm going to share it with you so you can see. Let me know if you can see the chart. And then let's pull up the RSI. Can you guys see AMD? All right, awesome, right? So this is the RSI down here. Let's pull this up right here. So this is the RSI. So the RSI, that's the relative strength index, right? So anytime that it's above 70, right? Anytime that's above the 70 line, that means prepare for a move to the downside. It is overbought. Anytime that it's below this 30 line, that means it's oversold. Prepare for a move to the upside. So anytime, like in pre-market, when you see the market is red, right, where it drops so much, and I always say, hey, prepare for a relief bounce. We're going to get a bounce at the open. That's because it's very oversold. Because it's very oversold, you're going to get a change in the direction. You're going to get a change in the price, right? People are taking profits. This right here only signifies, right? People are taking profits down here. There's more. Now you're going to start to get some buying pressure, right? People are selling up here, right? People are selling up here, right? So now you're getting some selling pressure. You're going to get a down movement, right? So if you look right here, right, the RSI up here, as you can see, you got a price change started coming down, right? So this is how I like to look for reversals. And depending on what, this is the 5-minute time frame. It's the 5-minute time frame. Or even the next one over here, if you look right here, overbought. Right here, right? This area. So something to keep in mind, just because it's overbought or oversold, that doesn't mean it's going to happen exactly right there, right? Doesn't mean it's going to happen exactly right there, right? However, it's going to happen. It's just only a matter of time. It's just a matter of you got to see, is the price action starting to slow down? If you got to look to see, are the candle size, are they getting smaller or are they getting bigger? What's happening with the candles, right? Look to see what's happening with the candles. What you'll start to see the bears start to put up a fight. You're going to start to see the wicks start to get a little bit longer, right? So you want to look for that, right? So let's see. Let me show you right here. Let's take a look at this one, right? So right here, we're getting a lot of selling pressure. It's coming down, completely oversold over here, right? And that was the start of the uptrend right here. That was the start of the uptrend. That was the start of the price change. If you look ever since then, right, to where it's at now, that was at $84, right? And it closed at $89.68. That was the start of an uptrend. Also, take a look as well. Look at this trend line right here. Literally just drew this trend line. Look at this trend line right here. All right. So overbought above the 70 line, right? I like to look for it to see, like, are we starting to get a little bit of a some volume starting to come down? Is the candles getting smaller? Like, what's happening? Because what you'll start to see, they'll start to lose some steam, right? Right, it'll start to lose some steam, and then you'll get a little bit of a a breakdown. Right? What was the question? How do you decide which strategy you use? It all varies depending on the price action, right? I don't have a set specific, like I'm not thinking, hey, let me just go and use this strategy. Is like I have all these strategies, and whichever one that I see hits first, that's the one I'll decide to go with, depending on that price action. So say if as soon as we get in, right? Oh no, as soon as the market open, I see the market drops instantly. Normally what would happen is I never will go in right then and there. I'll always say, hey guys, right? I don't want to force a trade. I don't want to chase it, right? Because oversold or it's overbought. Or if we're in a trade, right? I always let you, anytime I'll tell you take profit, I'll say, hey, take profits, right? Or set a trail stop because right now it's currently overbought. That means I'm getting ready. We're probably going to see a price shift, a change, a reversal, right? But you don't want to happen. You get caught up. You get stuck into it as it starts to come down, right? Because now we have enough selling pressure, right? The momentum is going to start to come down, right? So you can literally go from winning the trade to losing the trade instantly, right? And you have to be able to monitor that and see that, and that's using the RSI, right? And if you're not mindful, if you're not careful, if you're not paying attention to it, then you're going to get stuck. You're going to end up getting burned, right? So RSI, that's definitely one you want to add to your, it's one of the indicators that you want to add, right? And in the indicators that I had said so far were I use the 50-day moving average, the 100-day moving average, and the 200-day moving average, right? 50-day, 100-day, and 200-day. All right, that's funny. But I have to applaud this brother trying to help us out at the barrel for real. You're welcome. It's the least that I can do. At the end of the day, whether you guys have to apply it, right? And it does not hurt me to give you information, right? Whether you learn from me or somewhere else, right? The least that I can do is teach you, right? This is the least that I can do because at the end of the day, I'm still gonna get mines in the stock market. Whether there's 1 million members, whether there's 5 members, I'm still gonna wake up and get in the stock market and use the tools and the skills that I have, right? So back to what I was saying, right? So you want to use the RSI, look for reversals, right? And even if you guys can see right here, as I was saying with the trend line, it was all there for you. It was all there as well, right? This is the 5 minutes. So let's take a look at different time frames. Different time frames, you'll see different things for the RSI, right? A 5 minutes, right? Something you might see, right? You might see the 1 minute where literally it won't be overbought, but in the 10-minute, it'll be in the 5-minute, it'll be overbought, or in the 1 hour. So you'll see different things. So depending on what you're trading, what time frame that you're using, that's the time frame that you have to go with, right? If you're day trading, what I would recommend is go with 1 minute, 5 minutes, and the 1 hour time frame. 1 minute, 5 minute, and a 1 hour time frame. All right. Those are going to be your best bet for day trading because you want to get in and out of the trades, right? Let's see here. Oh, this was this trend right here, right? Before we broke this trend, right? This was very overbought too. Ooh. All right, so let's go into the next one. Before we go, let me just kind of show you guys exactly what I'm talking about when I say it's overbought, so you can understand, right? So like this was a signal that I had sent, right here. So if you notice, I put take profits when comfortable. Going to take it here, leave a runner or trail stop. Has more room to go, but overbought. Right? I was at 25%. I knew the stock was overbought. This was NVDA at the time, right? Because I was looking at the RSI. So therefore, that tells me get ready for a move to the downside. Therefore, if you're winning the trade, the last thing that you want to do is end up losing the trade, right? You don't want to bag hold. You do not want to do that. And the way that you protect yourself is have a trail stop, right? Have a trail stop, or just get out of the trade and take your profits, all right? So let's go into the next one. All right, so patterns, right? This is the last thing to my strategy. Like right here, this is like, I can't tell you guys how important it is to be able to identify certain patterns that you see. The last week, the last webinar that I did, we went over all the different patterns that I use. These are all these patterns right here. right? So for patterns, all it is, you're identifying a formation. You're identifying a formation. And each formation will signify if that stock is going to be bullish or if that stock is going to be bearish, right? Each formation is going to signify something. If the stock is bullish or bearish, right? And then I'm going to show you. I'm going to pull up last week's pattern just to show you real quickly, right? And I won't take too long for the sake of time. Let's see. I'm going to share. All right, so I'm going to share this screen just so you guys can see it. All right. Do you guys see this pattern? The bearish pin bar? Let me know if you do. Give me a yes. All right, awesome, right? So patterns that I use regularly, right? Pin bar, bearish pin bar, right? Bullish pin bar, right? So I had made, honest, we had gotten in a swing trade. This was like, I think it might have been last week or the week prior. And this was literally using this pattern. And I'm going to show you, right, how I found it so you can see for yourself, right? So we're going to pull up SPY. And then for these patterns, right? So this one, the pen bar, you want to look for that on the daily and then the 4 hour and then the 1 hour, right? So we're going to pull up SPY, and I believe I found it either in the daily or the 1 hour. No, the 4 hour. Let's see. Might have been daily. Let's see. This is AMD, sorry. Let's go SPY. Yep, this was it right here. So let me clear the screen. Right. So right here, this was the bearish pin bar, right? This when we got into this trade, right? This was the bearish pin bar. This is what it was forming. This was before all of this. So we got into it when it was around here, and ever since, right? It's stock, the SPY, the S&P 500 dropped to 380. This has been a $20 move ever since we got in there. It's been a $20 move to the downside, right? If you can find these setups, if you can find these patterns, they will be golden. They will be golden, right? And all we did was literally identify the pattern. That you just all you're looking for is just looking for any formations that you see, any formations that you see. And this was the pattern, right? And I'm going to pull it up just so you can see when I was looking at it at the time. Let's pull up. Let's see here. Let me show you. All right, let's go to the chat room. I had showed the guys before a while ago. Let's scroll. Let's go to the chat room. Where was this at? There it is, right here. This was it right here. This was where SPY was at the time. This was the bearish pin bar. Right, and then we had swing traded that one. Right. This was, yep, SPY, March 7th, $385 put. This was a swing trade. March 17th. All right. So I believe we made like 31% on those. And that was literally from playing that pen bar. It was SPY and the VIX. Where was it? Let's scroll. So you see. There it was right here. Right. Right here. And this was 31%. And at that time, it was around $395, $400. And SPY hit a low of 380. It hit a low of 380. It hit a low of 380. So it just goes to show you, being able to identify the right patterns, you'll be able to make money, right? Let's take a look at some other patterns now, right? And I won't go through all the patterns for the sake of time, all right? Because we've been on here for about an hour. I don't want to waste, not waste, I don't want to take too much time because I also have, it's late, don't want to spend too much time in here. Let's see. I'm going to show you some other patterns. All right, so other patterns you can look at is the bull flag right here. All right, so write these down. All right, the bull flag, the bear flag. These are patterns that I use daily. All right, the bullish pennant, the bearish pennant. Like we use the bearish pennant today, actually. Right, we use the bearish pennant today. Let me just kind of share it. Excuse me. Let me use the bear. Let's pull it up. I'm going to show you. Use the bear flag and the bearish pennant. Let's pull it up. Just kind of show you exactly what I'm talking about. So this morning, right? This morning, let's go with daily watch list. All right. So this morning we got into a trade. The market was choppy, very choppy, right? So we made profits on it. So this was what was forming right here. This is right here, the bear flag, right? So it was forming a bear flag originally on the 1 hour. This was pre-market. I saw this developing in the 1 hour. And then as the market opened, you started seeing it on the 1 minute and started seeing it on the 5 minutes right here. All right. That's the bear flag. I'm just kind of show you guys again what the bear flag is. All right, just so you can see again. Hold on. Right here. This is the bear flag. So what you'll have is a downtrend, and they'll hit a level of support, and it'll stick within this channel, right? Stick within this channel, and then it'll drop, right? This is what you have, bear flag, right? And then this was the bearish pennant right here, right? And those were the two setups. Let me pull it up again, new share. Right here. So this was the bear flag. So it was flagging, and then it started falling. The bearish pennant over here. So it stayed within this triangle. All right, started consolidating, and then it ended up dropping. Made profits on it, but I got a late fill. Mine's ended up filling late, but it still made profits on it. It was made profits on it. Should have been like 17-20%, but I got a late fill. I had to redo it. It was moving extremely fast. Yeah. So that was the bearish pennant right there for you guys. And then, yeah. And then before, as you notice, it was a bear flag. It was a bear flag. All right. Let's see. So now let's go into some quick Q&As. All right. Let's see, you guys. All right, let's see. Let's take a look at some questions. Let's take a look, guys. How do we determine how much can we make based on where we expect the price to go, delta, etc. Blah, blah, blah. How do we set a stop loss? How do we base a break, and how? That question is a very long question that I'll have to address. Like, I'll have to make one of the calls just to kind of show you to get into that. All right, because it's not as simple as that. Right. So the best thing that I'll say for you is just to have a risk management strategy. Right. So what I would recommend, and then we had addressed that in the 2 calls prior, where say if you have $1,000, right? With that $1,000, right? So say if it's a small account, you're using $1,000 account, right? And in that $1,000 account, use a certain percentage, use about 10-15%. It's $150. Use $150 for the trades, right? For each trade, right? $150 max per trade. And as you can see, it's very doable because every trade that I send out, right, I try to make it as affordable at 93 cents, $1.03, $103, $112, right? So you can get in a trade using that percentage. And then therefore, in the event, worst case scenario, if that trade goes against you, you don't lose more than the $150. But we're going to have a stop loss, right? What you want to do, you can use a 10-15% stop loss or 20-30% stop loss, right? All based on what you want to use. However, 20%, say if you use a 15 or 20% stop loss, now you go from being in the trade using 10-15% of your account, now you're looking at about half, right? So worst case scenario, you're only losing about 5% of your account. So you're protecting yourself, right? So it's a long-term game, protecting your capital, right? And then you'll obviously, as time go on, you'll make more profit, keep your losses smaller, right? So use that as a risk management strategy, and then, right, Because what happens, the reason why you can't, like, to set a specific amount that you're going to lose, right? It's not that simple. Reason why, because depending on what the price action is, where the support is, where your resistance is, everything varies minute by minute. So what you can do, you can have stop limits where you have the percentage, right? Where you have the percentage. Because if not, you're going to be trying to calculate a bunch of different things, and that's going to be a whole different ball game, right? So use a percentage, and then for any trades, like for example, right? Let's go to profits, right? So for example, today of the chop, right? We got into NVDA, ultimately made profits in NVDA, right? However, for NVDA, my sell, because I was down about 15%. I was down about 15%, but I didn't sell it. Why? I'm just going to show you. Right here, I knew this right here was the top right here. I knew this was the top of the bearish pennant right here. So I knew if it stayed right here, it started forming here, this was the main resistance. This was also a main support of the bear flag, right? So I use this as my sell level, right? But it never broke and hold that level. So therefore, right, as you can see right here, it rejected. It rejected, got rejected, and it came back down, ended up being profits. So say if I went into it saying, hey, my stop loss is only going to be 15%, I would have been screwed. I would have been screwed. The reason why is because I didn't allow the trade to develop. But if you understand, if you know the price action, then yes, right? If you understand the price, because what happens is, right, it bounced, right? It bounced because that's what happens when you're in a choppy price action, choppy market. You don't have a clear hard drop. It takes time. So it bounced, it went up, but rejected where I wanted to, well, where I knew it was going to reject. But I knew the sentiment in the market was a bearish sentiment based on the bear flag that I was filming, which right here, prior to it coming down right here, based on this bear flag, and then based on this bearish pennant. These are all bearish movements. So that was why I stayed in that trade. However, if you didn't know that, right, if you're like, you see 10, 15%, you would have panicked. If you don't know any of it, you would have panicked. So it all varies. If you understand your support levels, if you understand the price action and these setups, then you'll be able to know the perfect spots to get out, right? And this is why I always tell everyone in advance, right? When I'll tell everyone my prices, right? Let's see what other questions. Let's see here. Please upload last week's call. I wasn't able to get in. Yes, I'll upload those. Can you go over how the strike price correlates and the money out of money? I did that one in the the webinar prior. I'll do the next webinar. I'm gonna put all the basic stuff for you guys, right? All the basic stuff like that for you guys to make it as easier, because it's going to require a little bit longer of an explanation for all these different things. All right. Is there an app to see the trend? No, you have to draw the trend yourself. There's not a specific app to see the trend. You have to draw the trend lines yourself, right? And that's easy. You just literally pull up the chart, and then as you're pulling up the chart, you draw a line, just like that. You pull up the chart and then you draw a line. All right. And then, yeah, literally, you'd have to do it yourself. Literally, you just click on the chart and you click on the line and then you look at it. You have to be able to identify the trend yourself. Because if you can't identify the trend yourself, then you're not going to be able to know if it's bearish or bullish, right? And it's literally an eye test, right? And then don't forget, guys, those that are watching on YouTube, I'm going to leave the link below for access to the server, right? And then once you get in the server, you'll have access to the videos. I'll post the videos, the previous videos. If you didn't get a chance to see them, they'll be in here as well for you guys to watch. And then you'll have access to future webinars, the watch list, and all that stuff. And then as well, for the signals, remember, you have to click on here to upgrade. Monthly subscriptions, $39.95. All right. And then you'll have access to this server where you'll be able to get into these trades with me. All right. And then, yeah, you should be able to make some money. Win rate is 90%. The last 20 trades, I've won 17, right? And 3 losses. That's the last 20 trades, 17 wins and 3 losses. Yeah, the numbers speak for itself, 90% hit rate. So it's all there. All right. And if you guys, I'm going to jump off now, guys. So if you guys have any more questions, all right, you can send me a direct message in the server. All right. And then, yeah, and I'll try to do my best to get back to you guys as soon as possible. All right. Let's see. And then, one last thing. If you guys can do me a favor, right, just in the chat room, right, just leave a quick quick, if you enjoyed tonight's session, if it was helpful for you, just write a quick little comment, just letting others know, so therefore they'll be encouraged to kind of see it, because I don't want other people to feel like, oh, this is a scam or anything, like, just so they can know it's there, like it's there for them. It's a resource that I offer to help, so other people can be empowered and encouraged to get all this free information. All right. And thank you back. I appreciate it. So just leave a quick comment in the chat room, guys. Thank you. And then, what is your availability Friday for one-on-one? Send me a direct message in the server. Send me a direct message in the server, and I'll get back to you. All right. With that being said, guys, thank you for jumping on. I appreciate it. I appreciate your time, and I hope that you guys were able to get some valuable information. I was able to help, and those that are watching, thank you. Make sure you subscribe and make sure you check out the link below. All right. And with that being said, I'm out. Have a great night. You're welcome. Thank you. Thank you. You're welcome. Thank you. All right, guys. Have a good night.